Welcome to ForexTV.com's PM Exchange. It's Wednesday, November 28th. I'm Remy Hoki. Today I'm joined by Joel Kruger, Senior Currency Analyst at Thomson Financial. Joel will weigh in on today's New York session, as well as how the U.S. Fed rate outlook will affect the U.S. dollar. Good afternoon, Joel.
Hi, Remy. Good to see you.
Great to have you on the show today.
Good to be back.
Well, in today's session, we saw U.S. equities rally with the Dow up triple digits, and we also saw the U.S. dollar weaken against the euro and sterling, and obviously the yen weaken and pull back. But going into tomorrow's session, in light of the Fed rate cut outlook, if you could tell us where you expect to see the U.S. dollar heading against the majors.
Yeah, I think over the last several days we've had a lot of interesting price action with the euro. To me, it's been amazing what's going on with the Fed this morning. The markets were very excited with Mr. Cohen's comments about interest rates, seeming to take into account the fact that he seems to imply that the Fed's going to be cutting. I've been shocked by what's gone on in the markets. Yesterday, we had two Fed members come out extremely hawkish. Plosser and Evans both came out. Both were saying that, one was saying that we can't cut rates. We shouldn't be cutting rates to, it's not going to help the economy. We're just going to be essentially feeding the problem. And then Evans came out and said, things are balanced. And the Fed continues to show no indication of cutting rates. At the same time, you have a market that's been pricing in. And yesterday, after those hawkish comments, the market seemed to ignore them and continue to rally sharply on the Abu Dhabi purchase in Citibank. And today, Cohen, who came out with some dovish comments, he seemed to imply, was slightly dovish, but not nearly as hawkish as the others were. And Fisher as well today came out, and he was extremely hawkish, outlining his inflation concern. So as far as the dollar is concerned, we continue to chop around here. The euro is trading around 148 level, 148.50. I am of the belief that we'll see the dollar strengthen. There's a lot of reason to see the dollar go up. Oil is starting to come off a little bit, and people have traditionally hedged their dollar losses by buying oil, and as oil comes off, that should be beneficial to oil. And we've seen comments out from some of the OPEC members starting to say that they're going to increase production. And Saudi Arabian Minister of Oil has said that rates aren't reflective. So I think all this translates into a stronger dollar. And finally, just as far as the dollar is concerned with the euro, the ECB starting to pressure China into revaluing their currency, and because they've been bearing the ECB in the European countries and Canada as well, and some of the other countries have borne the brunt of this weak dollar, and they've sort of at these levels with the euro sort of had enough, and they're calling on China to accelerate that. So I think that all of this should translate into a stronger dollar.
Well, while we're on the topic of the Fed, this afternoon at 2 p.m. the Fed's speech book came out, and according to the report, 7 out of the 12 districts showed slower growth. So if you could briefly tell us about the Fed's speech book ahead of the December 11th meeting.
Yeah, once again, the markets seem to be interpreting Fed language and all Fed releases as being extremely dovish. They seem to be expecting a cut, and they're sort of forcing the Fed's arm. Today, the beige book came out. It certainly was on the dovish side. It showed that we are still growing, but yet at a slower rate, and yet the markets took that to be extremely dovish, and we saw a rally. Again, just to re-emphasize what I said before, I think it's amazing what's going on in the markets right now. The Fed, there's a huge divergence between what the Fed has been saying and what the markets are interpreting. The markets seem to want a Fed cut, and they seem to be pressuring the Fed for a cut, but the Fed has given no indication, as they shouldn't, for a Fed cut. These problems need to solve themselves by themselves. They need to figure themselves, and a rate cut is only going to fuel that problem. So I think the Fed should stay on hold, and that's my view, and I'm clearly in a minority on that.
And Joel, translating all of this into price action for the major pairs, earlier we saw euro dollar around 147.10, but now it's back above 180.50, and also sterling dollar is above 208. So if you could tell us what your levels are going to tomorrow's session,
Sure.
as well as the yen for against the dollar and euro.
Sure. Okay, so if we just go through the majors, key resistance in the euro right now is 149.10, and that's sort of guarding those all-time highs by 149.65. So if we break above 149.10, that will open the door for a retest of those highs. Below 147.85 is the key level. We broke that today. That's the 10-day moving average, and I think that's pretty significant because it sort of guarded the whole way up, and it's since August the 10-day moving average has been pretty supportive. So a break below there, I think, is significant. Back below there because we took it out today. Dollar Swiss 112 is the key level to watch above. That sort of coincides with today's spike highs as well as last week's highs. So if we break above 112 in dollar Swiss, you're looking at a real dollar up move there, and you're looking at a weekly reversal. Below 110.40 is the key level to watch in dollar Swiss. In cable, we got up as high as I wasn't sure earlier when I came over here, but 208.45 is the key level to watch above. We were just shy of there, and really we should see some offers come in by those levels and ahead of those levels to cap. And below 206.40 is the key level to watch below. Tomorrow they have out of the UK, there's some housing data, so that should really affect price action. Again, cable's been relatively strong of late. On the back of some comments out from some of the BOE members. Governor Sentence the other day came out, and Lomax as well, both sort of highlighting the fact that maybe a rate cut isn't as certain as the markets in the UK have been expecting, and that sort of has put a damper on the doves in the UK. So that's sort of we've seen cable appreciate, but not nearly as much as the euro, and we see that in a low. The cable's been appreciating more than the euro. We see that in a lower euro sterling cross rate. So the key level below in cable is 206.40, and then in dollar yen 111 is the level we want to watch above, and hopefully we'll look at the charts, and 109.30 is the key level below. So those are the rates for the majors.
Well, taking a look at data, you just mentioned data out from the UK in terms of housing, but tomorrow in the New York session we'll be having existing home sales come out, and new home sales come out. We had existing home sales come in weak as expected,
right,
and also durable goods. But looking ahead to tomorrow's session with jobless claims and GDP, and also Bernanke speaking in the evening,
right,
how do you see any and all of this data weighing on the majors?
Right. Well, first and foremost, I think the market is less focused on the structural data right now, and they're just simply focused on interest rate differentials and risk aversion. That being said, tomorrow the market's clearly going to be focused on the housing data, the GDP data, and most importantly, probably Bernanke. I think that the GDP is the X factor because the markets are sort of expecting what they want, getting what they want to expect, whatever it is that they hear from Bernanke or see from the housing data. That's already sort of priced in and built in. But a strong GDP number tomorrow will really highlight the fact that it's going to be very hard for the Fed to cut rates. So that, as far as the UK is concerned, we continue to see a deterioration over there in their markets. Their housing market, again, is extremely exposed to the subprime problems, and they've far from gone away. Yesterday's Abu Dhabi purchase is not going to, avoid the fact that there's a lot more to unfold in terms of the credit problems, and the UK remains highly exposed to that. So I expect their housing market housing numbers will reflect that. And again, I'd be looking to fade cable into these levels.
And last but not least, let's take a look at the so-called commodity currencies. One thing I do want to mention is that crude oil has pulled back, and it did close at $90.62 a barrel on the NYMEX today. So with dollar CAD briefly hitting parity yesterday, and today trading around 98.57, if you could give us your forecast for dollar CAD as well as the Aussie against the yen and dollar.
Sure. Dollar CAD, again, it's pulled back today, but again, from a technical perspective, it still remains constructive. I don't think that we took out yesterday's lows, so we have what we call an inside day, where the price action today, the highs and lows are still within the confines of yesterday's price action. So that doesn't necessarily, the pullback is necessary. We've seen the dollar CAD rally quite a bit, so a little bit of a pullback is fine. So as far as dollar CAD is concerned, I think we can use these dips to look for buying opportunities, and it still remains constructive. Fundamentally, there has been voiced concerns over the appreciation in the Canadian dollar, and data, including CPI last week, is starting to show that it's a little bit under control. So the Bank of Canada can start to feel less pressure about having to hike and maybe start to cut rates. So fundamentally and technically, I see more upside for dollar CAD. We're consolidating a little bit here. We need to unwind from sort of overbought levels. The key level above for dollar CAD right now is 1.0015, so just over parity, and that coincides with the previous monthly high. If we break that level, I think that will set up a more meaningful base by 1.0050. Sorry, 99.50, which is the multi-year lows, and it'll confirm a more meaningful base down there, and it'll open significant upside over the longer term. So I think that's the key level to watch above. Aussie dollar. Again, Aussie and Kiwi both. If I can talk about Kiwi too, the price action is similar in both of them. They're both the commodity currencies, and they both seem to be. They've been rallying of late. The key levels to watch above in Aussie are 89.50 and Kiwi are 78, and below. And Aussie 88.15 and Kiwi below 76.75. But again, if we have a chance to look at, I brought a Kiwi chart. If we have a chance to look at that in a little bit, I can highlight why I feel that they might be topping out still. Again, risk aversion is still a huge concern, and those currencies are very tied to risk sentiment. And as commodity prices start to come off, and as risk aversion will come back to the forefront, and one day, we've forgotten about it, but it is still an issue. I think that you're going to see these currencies depreciate. Right now, it's interest rate differentials are what people are focusing on, but these countries are going to start to slow. And I think that that should start to benefit the U.S. dollar. And if I just may say, I think on a broader scope, a lot of people have been concerned with the U.S. dollar selling off, and I really think that we're at an inflection point with the dollar. We're going to start to see the dollar rally over the medium term. And again, a lot of that has to do with the fact that right now the Fed is very focused on trying to balance between the credit markets and what's going on there, and and inflation, and those are two very big concerns of the Fed. As the rest of the world starts to slow, and we're seeing that, they're going to start to ease. Right now, they're in these rate hike modes, or if not on hold. But as the rest of the world starts to slow and they start to ease, the Fed's not going to have to be as focused on inflation as the dollar starts to appreciate on a relative value basis. Because as they ease and the dollar and the Fed eases at the same time, then they're not going to have to be worried about inflation, and they can be more concerned with cutting, focus on cutting rates to alleviate whatever credit concerns are happening. I think that we're going to see that over the short term, or over the next several months.
Okay, Joel, that's all the time we have today. So thank you very much for insight and analysis.
My pleasure. Good to be here.
This has been your Forex News with Joel Kruger from Thomson Financial. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks rallied in today's session with the Dow seeing triple-digit gains. The major indexes soared, all up over 2.5% on the day. Risk appetite seems to be returning to the market. Fed rate cut hopes fueled investor sentiment on Wall Street today. Meanwhile, data did not dampen the rally, as the National Association of Realtors reported earlier that existing home sales fell 1.2% to an annual rate of 4.97 million units in October. Sales are 20.7% below last September's figure. And also, the Department of Commerce reported that durable goods orders fell 0.4% in October. This follows the revised 1.4% decline in September. The fall in durable goods orders was mainly due to a steep drop in orders for computers as well as electronic products. Total orders for transportation equipment gained 0.2% in October. And at the closing bell, the Dow Jones Industrial Average surged 331 points to end at 13,289.45. The Nasdaq gained 3.15%, or 82 points, to close up at 2,662.91. And the S&P 500 advanced nearly 41 points on the day to end at 1,469. And in the fixed income market, treasuries fell in the session after rallying earlier this week. As the market weighs Fed rate cut expectations, risk appetite has increased. The benchmark 10-year Treasury bond was off with the yield up at 4.027%. The 2-year note was down, yielding 3.206%, while the 30-year bond was down with the yield up at 4.405%. And in energy, crude oil futures declined for a third session, falling nearly $4 a barrel. This came as U.S. crude inventories fell less than expected, and also as OPEC's president said that the cartel is ready to increase oil production. U.S. crude inventories fell for a second week, down by 0.5 million barrels in the November 23rd week. Meanwhile, crude stocks at Cushing, Oklahoma rose 0.6 million barrels. At the end of today's session, January crude ended down by $3.80 at $90.62 a barrel on the NYMEX. It has declined $7.56 since last Friday's close. Meanwhile, gasoline supplies rose by 1.4 million barrels in the latest week, while distillate stocks fell by 100,000 barrels, the lowest since the week ending August 31st. At the end of the session on the NYMEX, December RBOB gasoline fell 8.3 cents to close at $2.29 a gallon. December heating oil lost 7.96 cents to close at $2.5738 a gallon. Meanwhile, December nat gas futures fell 32.7 cents to close at $7.23 per million BTU. The EIA will report on U.S. nat gas inventories tomorrow morning at 10:30 a.m. And over in the metals complex, gold futures declined on the day, falling almost 2%. As the U.S. dollar gained and crude oil prices fell, traders sold off the precious metal. December gold fell $13.70 to end at $800.30 an ounce on the NYMEX. Meanwhile, December silver fell 15 cents to close at $14.335 an ounce. December copper gained 4.35 cents to close at $3.0060 a pound. This afternoon, we're joined by Derek Fry from O&F Futures and Options. He'll recap today's session in energy and metals and also provide his short-term outlook.
Recapping the action we saw in the energy and metal sectors today, I'll start with the metals. We did see gold pull back. It was down right at the open this morning. We did see a strong pullback against a stronger dollar. Just now at 2 o'clock here, we saw the beige book kind of reverse most of that. We saw a really strong bid in the dollar, kind of bringing us back to where we were before the dollar got the bid in it late last night. I think that that's just a very short-term reaction, frankly, and I expect things to continue going the way they were before this beige book number came out. We are targeting a move in gold to about $750, believe it or not, and in silver we're still expecting a push below $14 in the not too distant future over the course of the next few days or weeks at the very most. We do expect continued strength in the dollar. We are, like I said, looking for an overall turn in the dollar here. We've seen it already turn in the commodity currencies against the Canadian and against the Australian, but we're expecting the dollar strength to broaden out against a lot of the other major currencies, the euro and the Swiss franc and some others as well. And obviously we saw the stock market stabilize today too, which keeps the bid in the carry trade, which kind of fuels more of that dollar strength as well. So look for that kind of what we started to see last night overall continue on here as the day progresses, or as the evening and week progresses, I should say. Looking at the energy sector, not a real surprise there. The market was expecting bearish news. It got bearish news, and it took the market down. It went went lower than a lot of people expected. We only thought we'd see a couple of dollars come out. In fact, we saw 350 come out. The funds that we're aware of, at least, have a significant position that's been built up between $88 and $90. So we're looking for the funds to step in by somewhere near $88 and defend their position. So for the near term, we do see about $88 as a potential floor in this sell-off. But we do expect that level to be, at the very least, tested in the near term.
That was Derek Fry, head trader at O&F Futures and Options, with his commodities commentary. And that's it for today's edition. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.